right, ladies and gentlemen, as we do on Fridays, I'm going to update you on my $139,000 dividend stock portfolio. We're going to do a deep analysis of the gainers, the losers, and everything else in between. As my portfolio drips $6,116 as of this very moment, annually that is. That's not a monthly payment, I wish. And then we're going to go over my favorite stocks on my buy list that I'm thinking about picking up next week. So let's jump right into this.
Drop it.
Welcome back, my passive income investors. I woke up this morning checking out the mirror, smiling and grinning ear to ear because every stock on my watch list was in the green pretty much every hour on the hour today, guys. Taking a look at my StockTwits watch list here, it's just absolutely incredible. As the NASDAQ 100 hit all-time highs yesterday, the economy is slowly starting to open back up, leading to a lot of optimism as we get into my portfolio overview, and then we're going to deep dive into the nook and crannies of my accounts, which I'm sure most of you want to see. Let's just get through this real quick. Taking a look, I'm up a couple $1,000s actually over last week's update. It's sitting at $139,685 only as of this morning. So if I were to update this again, I'd probably have just cracked that 140K mark again. But taking a look real quick, guys, the total allotted dividend income is $6,116, which is primarily unchanged due to the Canadian dollar going up with the economy slowly starting to get a little bit more optimistic. And the most fascinating thing, like I said last week, is taking a look at the portfolio value day over day, because there's been so much volatility in the market. I found it kind of interesting that overall my portfolio has kind of balanced itself out, with financials and REITs for some of my bigger holdings getting slaughtered, kind of averaging them out to the rest of the stocks in the portfolio. But let's just get into these accounts, guys, because I know that's what you want to see. And by the way, if you want a portfolio tracker, head on over to the chartmaster.com, which sponsors these videos that kind of gives me this overview. So let's get right into this, guys, starting with the tax-free savings account. As always, my favorite account where all that tax-free dividend income comes in. A lot of dividend payments coming in. I had a drip set up, so I had some share buybacks going on. Taking a look, I got $173 in dividends, I think pretty much over last week. I got CM shares that just got paid out. BNS is still on a drip, and I haven't received that share payout yet, but even still, I love these banks where they're sitting right now. I wish I had a lot more money and I'd be buying them. Utilities are what bother me the most right now, because I got Northland Power and Southern Company in here, and I really wanted to start scaling those positions up, well, specifically Southern Company, because as we can see, it's really annoying that right now, because utilities have been baseline and they haven't really gone down a whole lot or up a whole lot. They've been flat, which makes up about 17% of my entire portfolio value. But on the dividend income side of things, guys, it's really only making up about 16%. And I would like to scale that, getting it into like my consumer discretionary, like my SIN stock level or my REIT level, considering I only make $968 annually off of my utilities. I'd like to see that get closer to $1,000, maybe even $1,500, but that'll take some time as my income slowly starts scrolling in here, guys. Now, talking about my real estate stocks, my RioCan and my TFSA has been getting hit by far the hardest. Now, as many of you OG subscribers are aware, yes, I still plan on using my line of credit to buy into some RioCan. I'm just waiting to get closer to the ex-dividend date, because if I use my line of credit, interest starts getting calculated daily. So I'd rather start calculating that interest closer to getting a dividend payment. And I am still extremely optimistic. I know many of you are really terrified of the real estate sector, but honestly, guys, I think the economy is going to be a little bit more robust when it comes back than people are expecting. There's going to be some hits, but I still don't think the hits are going to be as hard as the stock is currently valued at. And I still love it as it makes up some of my largest dividend income payers. Now, going into the US side, yeah, my MO, my BTI, my SIN stocks, as I mentioned, starting to get hit a little bit harder this week. I'm kind of shocked MO is continuing to downtrend, whereas BTI has been mainly flat in the overall portfolio. But that's why we diversify our stocks. We don't want all one sector being one stock, because that just equates to too much risk. And if I didn't have such a large position in BTI and I put it all in MO, I'd be getting slaughtered right now. But obviously, Apple, Microsoft, those tech giants I talked about yesterday, you have to have them in your portfolio, because, man, it's just crazy. They just keep going up. I can't get over it. If sometime down the road I get a bit of extra capital for some God knows what reason, I will probably continue to scale up some of my tech stocks, as I have with Facebook. So maybe let's take a look at my actual Facebook position here in my my managed account. And taking a look, guys, I got about 20 shares. Now, I'm not actually up on this position, even though it looks like I'm up $1,000, because many of you OG subscribers will remember, which by the way, if you're OG, slap that like button. And if you're new to the channel, subscribe and then hit that like button. But I actually pulled all of that money that I had to pay taxes on out of my RSP because I over contributed, and I liquidated my Facebook shares to transfer them over. Mind you, my average buy is literally $212. So if anything, I'm still completely flat on this position, and I even had to come up with an extra $1,000 to make up for the taxes for my stupid mistake, which I won't get back till next year. But overall, Facebook coming back with a vengeance. I was really happy. I picked my girlfriend some up, I think around the 170 range, and I'm still going to consider it one of the most undervalued tech stocks that sit in the top 10 list of the S&P 500. But overall, guys, really happy with my J&J position in the RSP account. It is up pretty substantially overall, considering that dividend yield is still dripping in. Really happy with that. Tesla, oh my goodness, guys. If you didn't catch it yesterday, Elon Musk was on Joe Rogan, and every time I share Joe Rogan clips, I get flagged. So maybe I'll try and share a little tidbit that's really going to be cut down because I don't want them to flag me.
This strange time where you're selling your houses, you say you don't want any material possessions, and why are you doing that?
I'm slightly sad about it, actually.
Well, if you're sad about it, why are you doing it?
I think possessions kind of weigh you down. You know, people say, "Hey, billionaire, you got all this stuff." Like, well, now I don't have stuff. Now what are you gonna do?
Yes, so I mean, Elon Musk just needs to do some regular podcasts, because every time people get really sketched out about what's going on with Tesla and like what Elon Musk is losing his mind on the Twitter sphere, I mean, he really kind of grounds everything on those podcasts. So I highly suggest you go watch the full video. It was very thought-provoking, very interesting stuff. Now, moving on, taking a look at my Wells Fargo position, guys. I got slaughtered on this bank. I own the majority of my Wells Fargo between this account and my RBC account. If we scroll down, guys, this is probably one of the worst performances I've ever had in any single position, which, by the way, I kind of skipped over, but I should comment on GEO Group as well. Now, GEO Group got hit a lot harder than I was expecting it to during this pandemic. I thought usually when things get a little rocky in society, more people end up in jail. But the fact of the matter with GEO Group was they actually shut down the entire judicial system. So nobody was going to court. Nobody was flooding the borders, which were getting locked up. So they actually saw a major decline in sales. But luckily, GEO Group, and one of the main reasons I bought it, is they have minimum contracts with the government. So even if beds aren't getting filled, they're still getting paid, which still in turn paid me a dividend, which bought more shares back this month. But going back to the Wells Fargo talk here, guys, a lot of people have been asking me about this stock recently. I don't own a whole lot of it, not even $1,000, I think, between these two accounts. One of my smallest financial positions, and I wish I was buying a lot more of it. Now, I plan on buying some more of it. Wells Fargo, to me, in the financial sector, is like that kid in school everybody makes fun of. I mean, they've just been going through scandal after scandal. I mean, their revenues have just dropped because of a lot of this stuff, including the pandemic, making them the most undesired bank stock, but they're still one of the largest, like the top 5 largest banks in the US, which makes me want to buy a little bit more. But if I'm being honest, if you're looking for really stable banks, guys, stick to your Banks of America of the world. I talked about this in yesterday's video. I mean, if you want the risk in the really high dividend yield, which I think sits at 8% right now, dip a little bit in, but I would still like some more stabilizers and growth in my portfolio. So if you already own Wells Fargo, maybe be hesitant on buying more and consider diversifying into some other financials. Like, again, you could buy the other banks or even Visa, MasterCard, Intercontinental Exchange, all incredible companies that are still uptrending and not continuing to downtrend. So I'm going to be really cautious how I approach Wells Fargo, but I'll probably pick up a few more shares here and there just because I already have it. Be nice to average down a bit. Now, what I would like to do, guys, is start talking about positions I'm going to be adding to my portfolio. Now, the first one on the top of my list is a penny stock, and I'm going to do a full breakdown of this probably either tomorrow or on Sunday, but I'm talking about a company called MMED. Now, if you don't know about MMED, it is one of the most complicated companies that I always talk about understanding, which is pharmaceuticals, and this is a company that has found a way to take certain chemicals out of LSD, and that is the primary drug they're focusing on, and they're saying that they're able to cure depression, opioid addiction, alcohol addiction, anxiety, even ADD. And if you look into these sectors of the drug market, they haven't been disrupted in decades. I mean, for ADHD, we only have methadone, which is an extremely toxic chemical to be giving kids. And I know as I spiel this to you, it's probably a little bit more convoluted and hard to understand, but the only thing that I can tell you to do is look at the research on these drugs and what they found out, and then look at the size of the pharmaceutical sector that has to do with antidepressants, anxiety drugs, along with those ADHD pills. I mean, it is a multi-tens of billion dollar industry. And like I said, it's never been disrupted. And this is a company that wants to partner with companies like Johnson & Johnson. They just need to get through these phase 2 trials, start getting it tested, and then they can start getting it FDA approved. And like I said, guys, it's a 50-cent stock. I'm not going to buy a lot of it, but when I run the math on it, this is the kind of investment you could throw $1,000 at. And if it's a gamble, don't get me wrong. I've never gambled like I have with a company like this, but I've never seen a company that has this much disruptive power that could literally take $1,000 investment and change it into a $200,000 to $300,000 investment. And again, very risky. I've never looked at anything this speculative. I thought Tesla was speculative, but this is next level, guys. And like I said, stick forward to the weekend. I'm going to do an entire breakdown of this stock and give you the bull thesis behind why I'm going to be buying it. At the 2 other stocks I'm desperately wanting to buy, just to stabilize my portfolio, is definitely Waste Management. They kind of took a little bit of a ding on their first quarter earnings because they do have some involvement in construction that got shut down. But overall, this is one of Bill Gates' largest holdings. I have been watching it religiously for years. I've had a hard time buying it because the performance has been kind of less than stellar performance for like 20 years of its history. But again, I'm looking for those stable dividend payers that I know are going to continue paying those dividends over the long term. It's just one of those companies you can hold like Johnson & Johnson. You're never going to have to think about it, and it's going to be in your portfolio forever. And then finally, another investment that I want to buy, but I'm really ticked off because it's done nothing but go up, is My Scott's Miracle-Gro. This company just proved that it is tapping its way into the MJ sector with ease because they're not dealing with growing. No. They're dealing with the dirt side, the peat moss side of it, guys. They supply all the dirt, and I was a little concerned about it because they supply dirt to everything from flowers, nurseries, all kinds of stuff. Now, with the pandemic, I was a little worried because they shut down all the places to buy flowers from. We were just heading into the flower season, and then all of a sudden, that was the first thing they opened up, giving a little bit more bullish news around Scott's Miracle-Gro. But where they're really slaughtering the industry, guys, is in that MJ sector, because not only are they supplying dirt to all the growers, they are actually supplying a new company they bought in California, which is basically an indoor hydroponics. They literally give you all the supplies you need to do indoor grow ops, and that has been an explosive sector for them that they just crushed on their last earnings, taking the stock into all-time highs. Now, I still love this stock. I really like the PE when it gets back down into that 20 range, a little closer to 20 than 25, but even still, if we're comparing this to a lot of kind of companies in a similar industry, it's cheap, in my opinion. It's fairly fair value, but I'm going to keep an eye on it. I'm hoping it's going to dip, and I'll probably start with about a $500 investment in this guy. And I will obviously update you guys whenever I decide to purchase these companies, but they are the ones that I'm currently finding the most attractive. As you can tell, I'm slowly itching away toward yield, as the first 5 years of my portfolio investment career was highly focused on high growth and high dividends. And now I've pretty much achieved that, and I want to start looking for more stability. But keep in mind, I'm still going to be buying RioCan. I'm still going to be buying a bunch of the stocks in my portfolio like Wells Fargo, but I'm looking for those new ads that not only fit my personal morale, but kind of fit what I'm trying to do with my portfolio. So I'd love to know, as always, what you guys think in that comment section below. Always love hearing from you guys, and I usually try and comment. I've been really good at replying to your comments lately, so stay cool, stay awesome, and I look forward to chatting to you tomorrow.